October 29th, 1929. Black Tuesday. The worst stock market crash in American history. While millions of people lost everything, one man made $100 million in a single day. That's over $1.5 billion in today's money. His name was Jesse Livermore, and he's the reason they created trading regulations. He didn't just predict the crash. He bet everything on it and won. But here's the twist. Within a decade, all of that money was gone. And by 1940, Jesse Livermore would take his own life, broke and forgotten. This isn't just a history lesson. It's a warning. Let's break it down. Here's what you need to understand about Jesse Livermore. First, how a 14-year-old kid with no education became the most feared trader on Wall Street and made his first million before he turned 30. Second, the exact strategy he used to predict and profit from the 1929 crash while everyone else was buying the dip. Third, what happened after his greatest win and why he couldn't stop himself from losing everything multiple times. And finally, the 3 psychological traps that killed Livermore's career and still destroy traders today, even with all our modern tools and knowledge. By the end of this video, you'll understand why making money in markets is easy compared to keeping it, and why the same patterns that made Livermore rich are the ones that ultimately destroyed him. The rise. From broke kid to Wall Street legend. Jesse Livermore was born in 1877 in Massachusetts. His family was dirt poor. His father was a farmer who wanted Jesse to work the fields for the rest of his life. At 14 years old, Jesse ran away from home with $5 in his pocket. He got a job at a brokerage firm in Boston, writing stock prices on a chalkboard. But while other kids were just copying numbers, Jesse was studying them. He noticed patterns. He saw that certain price movements repeated, and he started making predictions. By 15, he was trading with his own money. By 16, he turned that $5 into $1,000. By the time he was 20, he had $10,000. That's over $300,000 in today's money. The bucket shops, the small illegal betting parlors where he traded, started banning him. Why? Because he won too consistently. He would walk in, make a few trades, double his money, and walk out. They couldn't afford to let him keep playing. So Jesse moved to New York. Wall Street, the real game? And that's where he learned the hardest lesson of his life. Being right about the market means nothing if you can't manage your psychology. Between 1900 and 1907, Jesse Livermore went broke 3 separate times. Not just losses, completely wiped out, bankrupt. Each time, he'd rebuild. He'd study what went wrong. He'd refine his system, and he'd come back stronger. In 1907, he made his first legendary trade. He shorted the market right before a massive crash and made $3 million in a single day. That's $90 million in today's money. J.P. Morgan himself, the most powerful banker in America, reportedly sent a message to Livermore begging him to stop shorting because he was making the crash worse. Livermore covered his shorts. The market stabilized, and his reputation was cemented. He wasn't just a trader. He was the man who could move markets. The setup, how Livermore saw the 1929 crash coming. Let's jump to 1929, the roaring 20s. Everyone is rich. The stock market has been going up for years. Ordinary people are quitting their jobs today trade stocks. Sound familiar? Newspapers are running headlines like, "Stock prices have reached a permanently high plateau." Economists are saying the boom will never end. The Federal Reserve is encouraging speculation. But Jesse Livermore isn't buying the hype. He's watching the tape, and he's seeing something everyone else is ignoring. Volume is declining on rallies, meaning fewer people are buying at higher prices. That's distribution. Smart money selling to dumb money. He's also watching margin debt, the amount of borrowed money in the system. It's at all-time highs. People are leveraging themselves 10 to 1, buying stocks with 90% borrowed money. Livermore knows what happens when leveraged buyers panic. They don't just sell, they get margin called. They're forced to sell, and forced selling creates crashes. So in early 1929, Livermore starts building a massive short position. Quietly, carefully, he shorts stocks across multiple sectors, betting that the entire market is going to collapse. People think he's insane. The market keeps going up through the summer. By September, it hits all-time highs. Livermore is losing money on his shorts every single day, but he doesn't cover. He adds to his position because he's not trading price. He's trading the inevitable. Black Tuesday, the trade that made history. October 24th, 1929. Black Thursday. The market drops 11% in a single day. Panic selling. Margin calls. Chaos. But then something happens. A group of bankers steps in and starts buying. The market stabilizes. By the end of the day, it's recovered half the losses. Newspapers report that the crisis is over. The worst is behind us. Just a temporary correction. Jesse Livermore knows better. He watches the tape over the weekend. He sees the volume. He sees the desperation. And he knows that the bankers can't hold the market up forever. Monday, October 28th, the market drops another 13%. And then comes Tuesday, October 29th. Black Tuesday. The market opens and immediately crashes. There are no buyers, only sellers. Margin calls are triggering more margin calls. It's a death spiral. By the end of the day, the Dow has lost another 12%. In 3 days, the market has dropped 30%. Fortunes are evaporating. Suicides are being reported. The Great Depression has begun. And Jesse Livermore? He makes $100 million. In a single day, he short the entire market. And every point it drops adds millions to his account. When he finally covers his positions, he's one of the richest men in America. The newspapers call him the Great Bear of Wall Street. Some people blame him for the crash. Others call him a genius. But here's what nobody understood at the time. Jesse Livermore had just peaked, and everything that came after would be a slow, painful decline. The fall, how he lost it all. You'd think that after making $100 million, Jesse Livermore would retire, buy an island, live like a king forever. He tried for about 6 months. But trading wasn't just how Livermore made money. It was his identity. It was the only thing that made him feel alive. So he came back to the markets in 1930. And that's when the psychological demons that had always haunted him came back with a vengeance. Problem number 1. He stopped following his own rules. Livermore had a system, a set of principles that he'd refined over 30 years. Wait for confirmation. Cut losses quickly. Let winners run. Never trade out of boredom. But after his massive 1929 win, he started ignoring those rules. He'd take random positions based on hunches. He'd hold losing trades, hoping they'd come back. He'd overtrade when there was nothing to do. Why? Because he thought he'd figured it out. He thought he was special. He thought the rules didn't apply to him anymore. That's the ego trap. And it kills every trader eventually. Problem number 2. He couldn't handle success. Livermore's personal life was a disaster. Multiple marriages, infidelity, alcohol, depression. The more money he made, the more miserable he became. He once said, "I've made and lost 3 fortunes. The hardest part isn't making money. It's keeping it when your mind is working against you." By 1934, just 5 years after his greatest triumph, Jesse Livermore declared bankruptcy again. All $100 million gone. He'd lost it through bad trades, bad investments, and a lifestyle he couldn't sustain. He tried to rebuild one more time, but the magic was gone. Problem number 3. The market changed, and he didn't adapt. After the 1929 crash, the government created the Securities and Exchange Commission. They banned certain types of manipulation. They implemented circuit breakers and trading restrictions. The Wild West era of markets that Livermore thrived in was over. The game had new rules, and Livermore couldn't or wouldn't adjust. He kept trading like it was 1929, and the market kept punishing him for it. A tragic lesson in psychology. November 28, 1940. Jesse Livermore walks into the Sherry Netherland Hotel in New York City. He goes to the coat check room, pulls out a pistol, and shoots himself. He was 63 years old, broke, depressed, forgotten by most of Wall Street. He left behind a suicide note that said, "My dear Nina, I can't take it anymore. I'm tired." This is the only way out. The greatest trader of his generation ended his life alone in a coat check room. No fortune, no legacy, just a cautionary tale. But here's what makes this story so important. Jesse Livermore didn't fail because he didn't understand markets. He failed because he didn't understand himself. He knew how to read price action. He knew when to short. He knew when to cover. But he never figured out how to control his psychology, manage his ego, or find meaning outside of trading. And that's the pattern that repeats constantly in trading and in life. Skill gets you to the top. Psychology determines whether you stay there. What Livermore's life teaches us. Let's extract the principles here, because Livermore's life is basically a psychology textbook for traders and risk takers. Lesson number 1. Your system only works if you follow it. Livermore created one of the most effective trading systems ever developed. He wrote about it, he taught it, and then he ignored it. Why? Because after a huge win, discipline feels unnecessary. You start thinking you have some special insight that transcends rules. You don't. The market doesn't care about your ego. The second you stop following your process is the second you start losing. To fix, write down your rules. Every single one. Entry criteria, exit criteria, position sizing, risk management. And then treat them like law. No exceptions. No special circumstances. No, just this once. Lesson number 2. Separate your identity from your results. Livermore's entire self-worth was tied to trading. When he was winning, he felt like a god. When he was losing, he felt worthless. That's why he kept coming back, even when he should have walked away. He needed the validation that only winning trades could give him. This pattern shows up everywhere. Entrepreneurs who can't stop building companies, even after they burn out. Athletes who destroy their bodies trying to recapture past glory. Anyone who ties their identity to a single thing. The fix? Build a life outside of your work. Develop relationships, hobbies, interests that have nothing to do with your performance. So when you have a bad day, a bad month, or a bad year, you're still a complete person. Lesson number 3. Risk management isn't about one trade. It's about longevity. Livermore made and lost multiple fortunes because he would bet everything on single convictions. When he was right, he made millions. When he was wrong, he lost everything. He never built a system that could survive being wrong. And in markets, you're going to be wrong. A lot. The best traders aren't the ones who are right most often. They're the ones who can survive being wrong and still have capital to trade the next opportunity. The fix? Never risk more than you can afford to lose completely. Position size based on the worst case scenario, not the best. And always keep something in reserve. Livermore's tragedy was that he understood this intellectually, but couldn't apply it emotionally. Your action plan. Here's what you need to do if you trade, invest, or take any kind of financial risk. Step 1. Write down your rules right now. Not later. Right now. What are your criteria for entering a trade? What's your stop loss? What's your position sizing formula? When do you take profits? If you can't answer these questions in writing, you don't have a system. You have a gambling problem. Step 2. Set up external accountability. Trading is lonely. Livermore had no one to challenge him when he broke his own rules. No one to tell him he was making emotional decisions. Find someone, a trading partner, a mentor, a journal where you document every trade and the reasoning behind it. Something that forces you to think before you act. Step 3. Define what enough means for you. Livermore never knew when to stop. He kept chasing the next win because nothing was ever enough. That's a recipe for disaster. Decide right now what your goal is. What amount of money would actually change your life? What return would let you walk away satisfied? Write it down. And when you hit it, have the discipline to stop. Take these 3 lessons seriously. Follow your system. Don't tie your identity to your results. And protect your capital like your life depends on it. Because Jesse Livermore proved that you can be the best trader in the world and still lose everything if you can't and master your own mind. He made $100 million in a day and died broke. Don't let that be your story. The market doesn't care how smart you are. It only cares whether you can survive long enough to be right when it matters. Learn from Livermore's wins, but learn even more from his losses.